because I know we talk a lot about the election, but we always talk about money and the money that's being spent on migrants and things like that. But we want to understand how you're going to be affected, whether each candidate, despite what we may feel, the reality is that we have to plan for both. And either way, the bag chasers is going to profit from it. All right. So I'm definitely going to be reading y'all super chat shortly. But before we do so, let's deep dive into the stock market because CNBC basically did a summary of what they think the election is going to turn into or what they think the election is going to do to affect the stock market. Make sure you hit a like for the algorithm, subscribe to the channel, and turn on your notifications. We're going to spend 10 minutes on this, not a minute more. All right. Let's get to the money. I want to actually scrub through and get to the different points because they say what a second presidency of a Trump would do, and then what a presidency for Kamala Harris would do. All right. So we just going to get straight to it.
Will end the devastating inflation crisis immediately, bring down interest rates, and lower the cost of energy. We will drill, baby, drill.
A victory for former President Trump in November will likely mean favorable conditions for the market.
Trump has made it pretty clear that he wants lower rates. He wants to be friendly to the market. He wants to be friendly to certain sectors.
You'll see a rollback in regulation, and some of the existing regulation that's pending will get neutered or fall by the wayside.
We'll have a less repressive regulatory environment, and you'll see companies more likely to engage in M&A without having that overhang of the regulators coming in and blocking transactions.
The biggest beneficiary, which is deregulation, M&A, regional banks doing better, that's small cap stocks.
If you look at after Trump was elected in November 2016, small caps in those initial months really performed well, doubled the performance of the S&P 500. During his administration, the performance was right in line to slightly below large caps, but we didn't have this really wide performance disparity that we're seeing now between the mega caps and everything else.
Trump's recent embrace of crypto could also translate to a boon for the industry during his second term.
Trump has done a 180 on crypto. I think for him it's very transactional. He himself wouldn't care as much about it, but if you had someone running the SEC who was pro-crypto, that would be seen as a big boon for the crypto community.
Yeah, I'm actually starting to do a lot of research. I'm deep diving into the woods, the infrastructure that stands it up, the ability to mine it out. Because I don't feel comfortable ever investing in something unless I truly understand it and I've done my due diligence, extensive due diligence. Blockchain technology, I'm deep diving into all of that to better understand crypto so that we can start to discuss it. Because again, I think that there are experts on it, but very few people can explain it. And that's a problem for me. If you can't explain it like a little child, if you can't explain it like a C student, then I don't think that you're suited to actually invest in it. And I think you need to understand everything you invest in before you get into it, no matter how much you think that you are missing out on it. All right. So I'm starting to get into and understand cryptocurrency and technology to the extent to where I feel comfortable investing in it long term. And I think that a Trump presidency probably expedites that. All right.
Because the kind of strong regulation by enforcement under Gensler would be gone.
Some experts say Trump's friendliness towards the energy sector, however, could ultimately be negative for the sector's stocks.
The reason it's negative for energy is somewhat counterintuitive, but President Trump is favorable for drilling, and he'd want to expand where we look.
Eric D says, Anton, please stay away from crypto. Why wouldn't I want to know about crypto? Why wouldn't I want to know every single thing there is to know about cryptocurrencies and blockchain technologies? Even if you listen, y'all got to understand, even if you never invest in something in particular, you still want to be able to understand how it impacts the economy, how it impacts investing, the world's currencies, all of this type of stuff. There's never anything wrong with becoming more knowledgeable. There's never anything wrong with becoming more knowledgeable because you need to be able to speak to, at least at a very, because my thing is real estate. I think you should just be great in one thing and then, maybe diversify a little bit depending on whether or not you want to get a little frisky, right? But don't be afraid to explore and do your research to things, even if you decide not to invest in it. There's never anything wrong with doing research, all right?
for oil, but that would put downside pressure on oil prices.
So even though that could be a positive in terms of operations for the energy companies, it doesn't necessarily mean they would do better, because it really is going to be dependent on where the price of oil is and what's going on really with China.
Drill, baby, drill is great for inflation. It's great for the consumer, but it's not necessarily good if you're selling oil. And oil's all about supply and demand.
Meanwhile, Trump's rhetoric on tariffs, including his proposed 10% tariff on all imports into the United States and a 60% or higher tariff on Chinese imports, could hurt large cap companies, while some investors say provide opportunities for small caps in other emerging markets.
Any kind of company which has got a large international revenue exposure, and they're typically those larger companies, they probably stand to lose the most, because if there is any kind of very significant tariff either against China, Europe, or any other country, those companies with international revenues, of course, are going to be more hurt than the companies which have.
So basically, what they're saying is, because I know y'all like for me to break it down from a C student's perspective, what they're saying is that a Trump presidency, which ultimately can include more tariffs against foreign companies, the companies that actually benefit the most are those that actually manufacture their products inside the United States of America and have less exposure to foreign markets. Now, it doesn't mean that American companies can't do business in foreign markets, but foreign companies that people are invested in, those could suffer because it'll be a bigger barrier to entry for them to actually be able to make money inside of the United States of America, which is still a huge, huge economy, and it pours into the profits of a lot of foreign companies themselves. So if these foreign companies, for example, does not have manufacturing facilities, if they don't build their products and employ American citizens, then they will not be able to benefit from the economy as much as American companies that manufacture their products here in the United States of America. So then it'll be a separation. One of the things that I'm banking on, and one of the things that I'm paying attention to, which again, a lot of people know some of the companies that I'm invested in. One of the companies that I'm invested in, and honestly, I'm able to take a little bit more of a risk because the rest of my portfolio is doing really well, is Rivian. But a lot of y'all know my philosophy would like that, and that I have a 15-year view, a 20-year view on that company if it was to survive, of how it would thrive. But what this is basically saying is that the play is, if Trump wins the presidency, to have less exposure to foreign companies that then choose to do business in America that depends on shipping products exclusively into America that's not manufacturing their products here, because tariffs will leave them more exposed, and their profits will then erode, which then plays on whatever it is that the people that's invested in their companies, right? The shareholders are the ones that's going to pay the price for that. All right, let's continue.
More domestically focused. And certainly that speaks to the small cap companies maybe starting in a slightly stronger position than the large cap companies under Trump administration. If there are greater actions against China, well then companies in India are probably going to see a lot of interest. In the last 2 years, we've already seen that India has acted almost like a diversifier against China.
If Harris is elected, an area that would tend to benefit would probably be some of the renewables, some of the green energy areas.
The biggest thing about Harris being in power would be protection and continued implementation of the Inflation Reduction Act, which is a key legacy of the Biden administration. A lot of it hasn't been implemented yet, but this is big for wind and solar, biofuels, nuclear, hydrogen.
One of the leaders in renewables would be a NextEra Energy. That's a company that is in the utility sector, so will benefit from lower rates. But alternatively, some of the policies that could come out would actually probably be pro more green, solar, wind energy. So I think that's another area that investors should be thinking about that could benefit from A, lower rates, but B, a Harris administration because of favorable viewpoints toward those industries and sectors.
Under a Harris administration, we would think that the international economy probably stands to benefit relative to a Trump administration. From a market perspective, the market will start to realize fairly quickly that maybe Europe, China, parts of Latin America are not going to have as serious tariffs enforced on them. So you could.
So basically, what she's saying is that Trump is America first. The Biden / Kamala Harris administration, which we'll have more of, probably an exaggerated version of it, is not so much, which would then also benefit a lot of foreign companies, which is where you would then put your money. Let me just say this. We don't even need to get into this too much more. My philosophy is to dollar cost average. All right. That's number one. because before you start getting into the thick of things and before you start to really try to figure out what's going on in the markets and stuff like that, S&P 500, dollar cost averaging, making sure that you research the companies, the 8 things that I look for when I'm looking to invest in a stock. Make sure y'all tap into the Patreon. Don't get too heavy into betting, right? And this is one of the things that I think that people get caught up in, is that they start to bet. They start to gamble. They start trying to time the market. They start to invest in companies based off of talking points and rhetoric instead of real research, because a fundamentally sound company is going to do real well regardless of whether or not there's a Biden administration or if there's a Trump administration. There are different markets and different segments that tend to benefit more, such as anything related to energy and the Green New Deal and all of that and tree hugging, right? Solar companies, maybe also, we don't know, because they are willing to cause more inflation for making sure that they protect the environment, so to speak, and push that agenda more than maybe the Trump administration that believes in making sure that they also invest in American first companies and that we need to get out of debt also, right? So it's two different philosophies politically, but then they can benefit consumers depending on which side of the fence that you invest in. But a fundamentally sound company, it doesn't really matter who's in the office, they're going to adjust, they already prepared for it, and their profits may take a hit, but it doesn't mean that they're not going to be incredibly successful because they are a part of the economy. You take an Apple, you take a Microsoft, you take all of these places. Um, we like to talk about the Magnificent Seven inside of the Patreon a lot, and then we take some of these pieces out. Right, we like to talk about certain ETFs. Those are awesome, but dollar cost average. Don't get scared. Don't get spooked. You're gonna be fine either way, and even if there's a lull in the market, because there's a roller coaster ride. It's up and down. It goes back and down. I remember in 2008, everything was way down. Really, it was just a buying opportunity because everything wound up coming back, right? So those that sold because they were scared are the ones that get massacred. Dollar cost averaging, meaning that you basically automating the investment process the same way that you automate your 401ks, you automate the investing process. Don't really pay attention to it. Continue to do your research and then make slight adjustments. You'll be fine. Make sure you tap into the Patreon, get in the stock club, and we're going to run it up. All right.